Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this is actually for the beginning of trading for Friday, since I'm at 5:05 p.m. Central Daylight Time on Thursday. And this is July 11th, 2019. So we waited too long, and that's what happened. As you can see, there's follow-through from the record close that we had in the Dow and other indices today. So power there. Steady in the metal markets. We're seeing a waffling, if you will, in early evening trade in foreign currencies against the dollar. Bonds and notes are still adding, if you will, yield to them. So the event of the day was the second day of wrap-up from Fed Chair Powell. And I think that what the market has to look at is this concept. Do you fight the Fed? That's going to be the issue that traders have to go with. You can think whatever you want, but it sounded an awful lot like the Fed is going to move come July 31st to lower interest rates. It looks like after that, and I'm just giving what I heard, the Fed wants to see how trade goes, because that's another element they're doing this with, looking on both sides of their shoulder. Can the U.S. and China make any headway? One argument might go that if U.S. and China were to make good headway before the 31st and reach a deal, which I give zero chance to, but if that happened, why would the Fed cut? On the other hand, the Fed makes a cut come July 31st, possibly. I can't tell you that they will. I can tell you what it sounded like. And if they did that, and there's still no trade deal later as we go on into maybe September or so, they may cut again. You don't know. What they're determined to do, and this is the words of Mr. Powell, not me, is not allow the U.S. to fall into that trap of no inflation like Europe and Japan is going through. These are not my words. These are very much his. I watched 6 hours of testimony, and I know what I heard. So that's what I think is going on. I was of the opinion, and I admit that I didn't think the Fed should cut interest rates on July 31st. But in hearing his, if you will, the thinking that he brings to, as the head of the Fed to it, they want to get ahead of the curve. They don't want to see the economy slow down, and then they fight forever to keep inflation at 1.5%, 2.1%, whatever you think it's at, because everybody argues what it is anyways. So what does that mean? Easing a monetary policy means interest rates in the near term, they're going to try to fight that inversion curve is the guess. They see it, we all see it, and they're probably going to try to change that as well. Do I know? I don't know. I can tell you what I heard. In looking at the weekly area chart of closes, you can't get away from the fact, new all-time high. We're up 13.5 points. It's an all-time high close. Whether the market stays there or not, I can't answer, but I can tell you that I think traders will be looking and saying, I missed the boat. Come back to that 18-day average. They probably will try to own the market there. Who knows? I can tell you this, if you look back all the way here to June 1st and where the market is going between the two, there are money managers going, darn it, the market got away from me. There are others that are just applauding, and they've made their mini year already halfway through the year. This is a bar chart with nothing on it at all, and this is it with the slow stochastics. The one pattern, and I had to move this down a little, but you've had higher lows, higher highs, all the way through this. A stall would happen if you took out this low right through here. That would be what I call a stall. The other part is now, if you look, the 18-day average of closes at 2963.40, and this is the low of that day, 2963.50. That's where your support magically is coming in. So they've come together, so to speak. Where could resistance be? Right here above us at the upper Bollinger Band. You hit it once, you backed off. Will you make a run there again? That's what I think the bulls are going to have to question. In terms of momentum, you've gotten the market up where I don't know where today's going to finish, obviously. So let's not count Friday's action. Let's go back to Thursday. Both numbers of the slow stochastic were over 80. On Wednesday, both numbers were over 80. The day before, they weren't. So the market by the end of Friday has to determine, are both numbers going to stay over 80? And that's what I call then embedding. Embedding means you convert the market from being overbought to locking in the momentum on the slow stochastic, and until the red line closes back under 80, the market is in theory looking for higher prices. That's what I took the embedded to mean when I created that particular definition to the founder of slow stochastics, George Lane. I then look at what the market has done in the NASDAQ. You came down, made a lower and low, but here too. Let's not count today because we don't know where Friday's going to finish. Both numbers were over 80 on Thursday, both over 80 on Wednesday, not there on Tuesday. So tomorrow's going to be another key day. In this market, you went up to the upper Bollinger Band, and just like magic, found some resistance stalled out there. Such a surprise. That's part of the theory of Bollinger Band. And traders look at that as a resistance area. Hitting it is not bearish. It's where I think smart money takes some money off the table, and then on pullbacks, they're probably trying to come in. You're going to say, well, that's in and out trading. The futures market is in and out trading. The leverage is big. You're not dealing with 50% leverage if you have a margin account in stocks. You've got tremendous leverage in this. One of the ways to cut that down, by the way, is you can trade these new, what they call micro contracts that are 1/10 the size, and they're almost tick for tick and big volume. I've been very, very impressed with what I'm saying. It's a neat way to take off positions, build them, and they're fungible. So from what I understand, if you create they're 1/10, create 10 of those versus your futures contract, I think you can offset them. I'm new at this part on it, and it looks like it is, but I'm very impressed with how the Merc has done this. CME Group. As I take a look at the Dow, still in an uptrend, higher lows, higher highs, right today, knocking on the door of that resistance. I think you'd agree. You got to 27,092, the upper Bollinger Band 27,108, and tonight you're at 27,085 with the Bollinger Band falling a fraction. This market is just overbought, but in an uptrend. In the Russell, you fell back to the support of the 100-day and the 18-day average. You've been a different type of market here. This is a market that's had the lower highs, lower lows, and it corrected into this number. Momentum is still pointing down. If this area gives ground, then I've got to be looking at the 200-day average for support. If the market takes out 1577.90, it still doesn't create the swing line with the pattern of higher highs, higher lows, but it keeps certainly the momentum of the market, or the bias, we should say, to the upside. Momentum is measured by the slow stochastic, has been warning this market wants to pull down. Look at the difference how that looks from the other three indices. A big question for yourself is, did this market already build this in? Is this going to be one of these Friday you take money off the table? Or what's the market going to do? Keep your eye on the VIX cash. It's been an idea for you through this. When you get down to the lower Bollinger Band, often what I've seen is the market, and if you go back and you look at your chart here, the market will get there, and then it seems to come back to that 18-day average of closes. I'm going to repeat a caveat. Past performance is no guarantee of future performance. It's something I've been noticing, though, and the job here is to just point things out. I don't recommend trades in these videos. I do that in my morning subscriber video. I see resistance at two levels, 1447 to 1484. The pattern right now is bearish with lower highs and certainly lower lows. But we'll see if the bears show up again and write those puts. In the bond market, well, you know what the Fed's trying to do, and if you don't, what they talked about, and I think what they were saying, is they don't like this inversion of the curve yield. They want to get the longer term rates, obviously, to do something here versus the shorter term rates, and they want to add yield to the longer term. So we'll see just what goes on with these at this point, but if you look at the bonds, look at how much they've come down, and that has certainly added yield all the way through. The big question for traders is, in the real world of the 10-year, are you going to get back below 2%, or was that it in the near term? We'll find out. Momentum is oversold. The trend is down. You've hit the lower Bollinger Band, and it's been supportive. This is called sideways action. And if you break out and start moving down from here, it could surprise you to the downside just because you're oversold. You got to respect that this market has been hanging down. You had an outside day down today. One of the things I'd watch over Friday, which is already, this is the action for Friday, it's begun, is not getting through yesterday's high, which was 127.20 and a half. I keep saying yesterday, you know it's Thursday, I'm recording, but in trading vernacular, it was yesterday. When we look at TLT, we'd been looking to see, and let me come back here this way, then it'll work for me. Here was the market coming into the day. Trend was down, bias down, you're under the 18-day average, lower highs, lower lows, and the market was not yet in oversold territory. Therefore, a possible target is the lower Bollinger Band with resistance at the 18-day average of closes. You broke through it. Now, sometimes you get the ETFs leading the futures. They can flip-flop on you. This market is oversold, but it's trying to break out to the downside. Keep that in the back of your mind. Other than being oversold, this is a breakout of sideways action. We'll know tomorrow a lot more as you trade, because I still say the resistance on rallies will be at that 18-day average. Does the market just leak away is going to be the question for the market. In the dollar index, what is this? And I'm going to say preemptive move by the Fed, trying to keep the economy from slowing down, working with interest rates to change of monetary policy. It appears, I don't know, and I want to be on record, I don't know if they're going to raise or rather lower interest rates come July 31st or not. There's still 2 to 3 weeks of data to come out here, but it certainly sounded that way. And I think if you pick up news articles everywhere, you're going to see that's how the market is interpreting it, that the Fed's going to ease a bit. Well, if they're going to ease, does that break the dollar at this point in the dollar cycle? Or does that mean the U.S. economy is trying to get ahead of itself? That's going to be the hard decision. This rally certainly looked to me, and we talked about that, like it had gotten up to the point where maybe it ran out of steam. It got overbought. You see that right through here. Would it reach for the Bollinger Band or just run out? Yesterday, the market, and this was Wednesday, this market ran out and stopped its uptrend. You now broke the pattern of higher lows, higher highs, and you're getting a little bit of follow through. Are you going to make a run for that 100 and the 18-day average of closes? Momentum hasn't yet turned down. I'd like to see that red line get underneath here, the blue line, and then it'll give me a better idea. In the eurocurrency, the question is the flip-flop. It's a mirror. You've got lower highs, lower lows. You've had this bounce. What's this market going to do next? It's probably waiting to hear what the European Central Bank actions might be going down the road. A lot of people are thinking quantitative easing is coming back into the Eurozone. The trend right now down, resistance, the 18-day average of closes, as I see it, in an oversold market. In the British pound, as I mentioned yesterday when we had the rally, I think that the market went across this high right here, stopped its downtrend. It's in an oversold market that has paused. Maybe that's the right word, with a lower low, higher high, bias down but oversold. Japanese yen. Let's take a look at how the market came in. This was the close on Wednesday. If the market rallies from here, one of the areas of resistance might be, that's all I can tell you because you're in oversold condition, might be the 18-day average of closes. You have an outside day up, you have a lower highs, you rallied today, hit it, and you can see you've backed away from it rather smartly right now. In Bitcoin, it certainly sounds like Congress is going after these cryptocurrencies, and I think the Fed made it very clear. They're not going to get a ride at this point in time. I don't know what the future holds, but at this point in time, they've got agencies within the Fed looking at it, and I think that any idea that Libra is going to just take off 1, 2, 3, enjoy yourself. 18-day average just hanging in right there. Let's see what the Fed action looks like and how people start viewing all that. I think money laundering is an issue that they're worried about. I didn't say it. I think we heard it from a number of people. Lower highs, staying under in the Brent, down. And it's interesting today, you didn't run dramatically, even though Barry, that new tropical storm, is about to bear down on Louisiana and cause an awful lot of flooding. And it has caused already a number of oil rigs, offshore rigs especially, to be shut down. You're overbought, you've had a big rally, and you've run into resistance between the 100-day average and the upper Bollinger Band. I think the pros took some money off the table today. You didn't quite get there on the WTI crude, and the market still got the upward momentum. It's our oil, not Brent, that's got the pressure on it from this storm. They might be waiting to see if they can get a little more out of it and what the weather patterns look like. Same could be said of gasoline, but I'd be watching. If that red line starts flashing under 80 at any point, I think the traders will take money off. In fact, I'd be surprised if some of the smart money doesn't take off part of their positions up here, only because you've had this nice run and you've got the storm event. What if it doesn't turn out as bad? In the nat gas, you got up again to the upper Bollinger Band. Same thing. You got a lot of rigs that are shutting down. Trend up, you've hit upside targets, and you're overbought. I discuss all this in a lot more detail at 6 in the morning each morning for my subscribers. What I try to do is get them set for the day's trade. So I'm assuming you're somebody interested in the markets. I'm assuming you might have ideas. I'm assuming you might be questioning some of those ideas at time. Well, if you watch me regularly, you might like my thoughts on the market and say to yourself, you know, I want to get and see what he does. And I'm not trying to break the house with this. It's 26.5 cents a day to give it a try. It's 40 charts on futures. I try to cover 3 to 5 ETFs at a time. I'm going to give you technical analysis galore, way more than you're seeing here. I'm going to add more studies that you see. I'm going to talk on the fundamentals early before the U.S. Typically, our government reports begin 7:30 in the morning Chicago time, so this tape is well before it. Points of entry, I can do exact what I think you should do. So I'm not going to say this what I think pros are doing. I will be telling you what I think you should be doing. Profit objectives, and of course, stops, because everybody's going to have an area that they got to get out. Nobody walks on water in trading. But if you're looking for that push or somebody to bounce an idea off on all these different markets, that's how you do it. You're able to pull the recording on the bottom. It tells you what section you're in, and there'll be a lexicon on the side if you want to just go to energies or whatever you want. Don't want to waste your time in grains, or grains are your thing and you don't want to look at energies. Again, for the first 30 days, $7.95. After that, if you decide to stay, it's $30. It's $15 for every 30 days. A lot of people go to the 1-year subscription, and then I give a break for $156 for the year. You can find out more by going www.iraepstein.com under Research or Education Morning Subscriber video, or you can click right up here if you're watching me on YouTube. It'll take you to that area. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.